Monday, August 7th, market analysis, Stan Ehrlich. Beginning of a brand new week, and we have the stock market indexes up a little bit this morning. In the last couple of weeks, and I always start out with the indexes and usually the spider, like again this morning, we have had some very, very good bearish engulfing ER sell signals develop. Spider, DIA, QQQs, Russell. They're not exactly the same, but let's take a close look. You remember that on October 13th last fall, we talked about the October lows, and guess what? They're only a couple of months away already. This is August, September, October, boom, 2 months from now. So in the next rally, which I think is going to start in the next week or two, we're going to be looking for a decline from September down into October, or maybe late August down into October. And we'll see how that pans out. But I wanted to mention now, before it starts, I don't think this top in the last 2 or 3 weeks is going to be the high leading into the October lows. I think there's going to be one more rally, and I think it stands a chance of making a new high. But there is a slim chance that in August you can see tops that end up providing a decline into September, through September, and finally into the October lows, or, if you will, about a 2-month break decline. So we'll see how this works out, but don't forget the October lows. We had a bearish engulfing ER sell signal in overbought conditions and in a resistance area just last week, July 27th. We had a new low and a new low close since then, Friday. We're dropping relatively close to oversold conditions, not quite. And we came very close to closing that 443 level gap that I've been talking about for weeks. This rally today, and we're up to 3 points at the moment, 395, basically high and last on the spider, I don't think is going to carry too much further. I'm not expecting much more strength. It could turn south any moment and start to make new lows for the day and continue on. At the moment, I'm looking for 443 to produce the beginning of a turn back up. In fact, it could be the low and the beginning of a turn back up, but there is a chance it'll slip off a little bit more to 437, 438 area. I doubt sincerely it's going to be too much more than that, but that's my opinion. In the indexes, including the DIA, and I'm bringing up that chart right now, we actually started to close the gap, not quite completely yesterday, Friday that is. And it was a bearish engulfing, the second one in about a week and a half. Today's rally doesn't do it any good or bad one way or the other. I don't like the fact that the bearish engulfing occurred in a relatively neutral RSI condition, but there it is. We were short this morning on this brand new Friday signal, have a little loss at the moment. Protective stop is above the high of Friday, and we sit back and we watch and see what happens. I'm bearish to at least the closure of that green bar, that gap area at let's call it 450, 350 on the DIA. But because it's so close, I'm expecting it to drop off some more. Now, there is another gap down at 343 and a variety of support levels in that same ballpark area down to 40. 343 to 340 is not out of the question. At the moment, doesn't seem particularly likely. So I have to keep a close eye out on the DIA to see where it stops going down, but my opinion is not changing. QQQs are coming closer, and they're very weak, relatively speaking, today, relative to the DIA and the Spider. We have matched Friday's lows, and that is very close to closing the gap I've been talking about again for 2 or 3 weeks. Gaps are almost always closed. They're like a black hole in space. They tend to suck the price action back into the gap area. Once we close these gaps, I think the market is probably very close to its low of the break and going to start to turn back up. We could very well, I hope, be in an oversold condition at the same time. The Russell 2000 has made a lower low and has one bearish engulfing. Didn't work, but these bullish and bearish engulfings, although the strategy is built to detect a major top and bottom happening the day it happens, they sometimes produce signals that are part of a topping out or bottoming out process and not the highest high or the lowest low. And they occur during little top and bottom formations, and sometimes they cluster. So seeing red basically means watch out, the market's going to top out probably, and seeing green is the opposite. So the bearish engulfing didn't work quite right, but we are now making lows lower than the sell signal lows. And I'm liking that. It's following through with the rest of my expectations. No gap to close per se on the Russell, but support starts at probably the area it's going to come down to a little under 190. Let's go to the futures. We got some dramatic situations happening. The Russell, the 30-year long bond. We had a buy signal from Friday's bullish engulfing in an area of support. And it got oversold, had a bullish engulfing, and that generated a trigger price at 121 and 3/30 seconds. Today's low is 121 and 1/30 second. Now we're currently trading 121.14, so we have about 11 tick profit momentarily, 12, 11 tick profit, and we missed the low of the day by 2 ticks. It dropped 2 ticks below our bid. We got it almost at the exact low. Love it. Perfect strategy performance so far. Need a rally. Don't need it to go any lower than today's low. And I want it to close above Friday's high. Stronger, quicker, the better. Perfect entry. Next chart. Whoa, didn't want to do that. And I was pointing out the 88-day cycle low again. By the way, I'll talk about the cycle highs. They're not as good as the cycle lows timing-wise, but it's noteworthy that they have a very decent track record. We got a bearish engulfing signal at the top of this red bar coming down from the top of the chart area down close to the price action, and that is our window of opportunity, or WOO, W-O-O, window of opportunity. And here's another one, and it topped out a little late, but very close. Here's another one. It topped out during the 10% of the 88-day window of opportunity. So what could you say? 88 days is 8.8. So 4.4 days earlier than the exact middle and 4.4 days later than the exact middle would be the window of opportunity. And we're rounding to the day. We're not doing fractional days on a daily chart. You could, if you're looking at, say, an hourly, but not necessary here. The point I'm making is August 16th, and today is August 7th. That's Wednesday of next week. We are looking for 4 days earlier than that day. Well, let's say next week, during next week. And today's Monday this week. So a week from now, a week and a half, maybe almost 2 weeks from now, I want to see a rally high, and I want to see it substantially higher than where we are. I'm hoping that it's up to 128 or maybe even better by then. Now, 10-year notes, basically the same thing. This is the E-mini. We had 3 sell signals on the top in a course of 6 days. Very, very unusual. Actually, 5 days. And you normally don't get that many sell signals in 5 days. They're working great. It was a new low and a new low close Friday. Today's a little bit of a bounce. I've got no problem with that. Again, I'm looking for it to turn around and start to make new lows very soon. Next is the 30-year long bond. We just discussed that. Now the 10-year notes. Did not quite get low enough to get to our trigger price on our ER3 new longs, and it's starting to come up, and is only down on the day a few ticks. 2. Next chart. I think it's going to go higher. We just didn't get our exact entry. We had a sell signal a couple of days ago, last week on Wednesday. Did not work, but we have been overbought and a bearish engulfing ER sell signal in an area of resistance. Some of my favorite combination. I am definitely looking for the crude oil to stop rallying, and Friday's high is almost the same as today's high, and today we're back down somewhat. Not change at the moment, and I think we may have started the decline. Next, we had a sell signal last Wednesday, also in heating oil, barely got stopped out. That's unfortunate, and now it is coming down pretty good. I'm bearish, looking for a significant decline in heating oil. Next, natural gas, long-term bear trend, rallying, not overbought yet, probably going to attempt to get up to 2.8, maybe 2.9, which is resistance, and probably going to be overbought if it gets there quickly. And that would be a great spot for it to turn back down. And I hope I get a bearish engulfing ER red sell signal at that point. So maybe it's going to go up a little bit more, but the long-term trend is obviously down. Lately, very much flat, but I don't really see that as a major bottom as yet. It could develop into something like that. And the key to changing my mind would be a good, strong close above 3. Next, bearish engulfings, sell signals on top. Gold had a second one. They're working great. Lowest low for the trend was Friday's low. Although it's a bullish engulfing, I see that. We weren't oversold, although we were close. I saw that. I don't think the rally, if we're going to see any more, and it could have been only the activity on Friday, and that's the end of it, is going to fade. It looks like it might be fading already, and we're going to see a test of the lows of late June and then lower after that. I think we stand a good chance of coming down to 1,900 or even lower. Next, silver. Fantastic. We have had such great signals lately in silver. Major tops, major bottoms, intermediate, significant turning points, starting, well, at the early part of the year. So, 2 sell signals lately. We already have a new low and a likely new low close again today since the bearish signals in silver. Next, and I'm obviously looking for more weakness. Silver is coming very close to oversold. So I will say the lows we saw before are probably going to cause a bounce. And it probably is just going to be slightly lower. I'm going to have to guess, what do you think? 123, 122.8, 76? Yep, something like that. Platinum. No great signals lately. We had a great bottom in February. We had a great top in January. We have some other good signals, but it's been a little bit. Bearish on platinum, looking for a test of support. probably looking for 390, 890, excuse me, and maybe lower. Next, copper. Sell signal on the rally high, a tiny bit above a resistance area, but it really poked its head up above water and couldn't stay there and nosedived right afterwards with an ER sell signal on the highs. Almost now in new lows, probably a new low close, if not new lows and a new low close by the time the bell rings. Not oversold at all yet, still downside potential, looking for lower levels in copper. Soybeans. We got a sell signal almost at the very top of the soybean market. Now, finally, we're seeing it come down to test the first support area that I talked about for weeks now. So it's also oversold. There's your combination. Support area and oversold might lead to a bullish engulfing ER buy signal, in which case I will turn bullish immediately. The long-term trend I had thought was looking for a double top, for a gigantic long-term top. But if we turn around, and we got relatively idealistic circumstances, technically speaking, at the moment to do that, especially if we get a green bullish engulfing, which we could, then I'm going to turn bullish to the tune of 14 plus. I don't know. We'll find out later. Next, soybean oil. Trend is obviously down, not severely, but I'm expecting to see lower levels in soybean oil in the next few days. Looks like it's right around the corner. Next, soybean meal, already on its way down, had a sell signal a couple days ago, but it was very low on the RSI scale, and I don't like having sell signals when we're that low on the RSI scale, and we'll probably change the code in the near future to eliminate that sell signal last Wednesday. So coming down, like what I see bearishly at the moment, looking for a move down to probably 370 area. Next, we're almost in a new low on corn. It's a new low for a couple of weeks and very, very close to a new low. This is a significant support area. I'll do it. I'll put my little support rectangle in there right now. Should have done that earlier. Pegging it off that low right there. And wow. Okay, let's flip it. I'm not sure where the other side of it's going to be, so I'll just leave it like that. Right here, got old lows, very close, very close, very close, dropped below it, didn't stay below it, got oversold and ran right back up above it again. Got close, bounced, got close, bounced, got onto it, bounced, and here we are, touching that support area again and almost back up to unchanged. It looks like corn is trying to turn back up. It did get down as low as I had said days or weeks ago to test this support area. We're not quite oversold, but very close. So support, very close to oversold, and maybe a little bit of a mild reversal coming up. So a little bit of a bounce in corn, but I'm not expecting much out of it. Next, wheat came close to oversold, and that's about it in a support area. And that was the end of last week, and we're rallying right now. So corn could follow wheat. I wouldn't be surprised. Next, live cattle. Sell signal on top. A little rally, a little more than I would have expected. I think I used those words exactly on Friday. And today we opened slightly higher than unchanged, and zoom, boom, starting to come down pretty good. I need to see a test of 178 and lower probably this week. I'm looking for lower levels in live cattle, and I'm not ruling out 170 flat to 171. Next, lean hogs. Sideways trading range, longer term trend down, neutral RSI. I don't know, not much to say, pass. Next, OJ, we did get a sell signal on the top of this gigantic bullish move and in extremely overbought conditions in the low 90s. You don't see it very often. So we got a bearish engulfing ER sell signal smack dab on top. Love it. Big fast break immediately afterwards, and ER3 got short. Great. Today's rally high probably is it. Looking for new lows this week and very soon. Next, cocoa. Gigantic bearish engulfing ER sell signal in cocoa. This is the kind of sell signal people would normally think is unbelievably profound. I really honestly can't tell you that's true. It's just a very big price range and red bearish engulfing, all the conditions I love. But will it work better than other sell signals? I don't have a historical precedence to say yes. All I can say is, red sell signal, it's big. There's a chance it could be very profoundly bearish. Wouldn't be surprised. Next, cotton, sell signal on top in a resistance area while it was overbought. Perfect. Now we're getting a little bounce today, so I don't think it's going to go very far. I think it's going to make new lows very soon. But we have already had plenty of opportunity to take some small profits in the cotton new short sell signal that we saw on July 27th. Next, sugar coming down. I'm looking for 2050 to 19-ish, couple of weeks maybe, period. No signals lately per se, but that's what I expect to see out of sugar. And coffee. No signals lately. Looking for a test of recent support. That would be 156-ish. There's a chance we could have an outside update today, key reversal or bullish engulfing, but it won't be an ER signal because we're nowhere near overbought or oversold for that matter. So we'll see what happens. And we're back to the E-mini. You guys have a great day. See you tomorrow.